Hi everyone, and welcome to a lecture on understanding asset price within the cryptocurrency markets. Okay, so starting off our lecture objectives. Number one is we want to understand market cap, what it is and how it relates to price. Number two, we want to understand the difference between total supply and circulating supply of a token or an asset. Number three, we want to understand how demand is shown through market cap. And number four, we want to be able to research a project's tokenomics on our own and project a future price based on mathematics, which we'll go over in a minute. Now, price estimations, this is something that we come across a lot in the cryptocurrency industry. You know, whenever we go on Twitter, whenever we go on YouTube, if we're looking into a project, we always see people chiming in and giving out their price estimations. And whilst I think it's important to sort of have your own, I don't think it's that important to sort of get engrossed in the idea of having a specific price target and, you know, holding out for that. If you're making profits throughout the year, you know, this is for another talk, but you want to be taking profits throughout the bull run so that you're constantly getting paid. But essentially, you want a price target for the beginning and the end of the beginning of the bear market, end of the bull market, so that you can sort of time your entries and exits to the market. So in terms of cryptocurrency assets as an investment, price estimations are sort of key, in my opinion, because we need to know where we want to exit the market sort of before we even get in. Whether something's a short-term trade or whether something's sort of a longer-term hold over a couple of years. So what you do is the first rule for me anyway, and what I implore you to do if you start researching projects and bringing up these, you know, sort of guessing prices in the future, is you want to remain subjective. You want to take yourself out of that situation and you want to look at the project with a subjective view. Now, the reason I say this is because it's very easy to get attached to a certain project. I'm guilty of it myself, and I know most people are. If you get into a project super early and you manage to grab, you know, a really good price, either during the bear market or throughout pullbacks through the bull run, and then your investment skyrockets, it's really easy to sort of have golden eyes for you know, that asset and sort of think it's going to the moon, think price is never going to slow down, it's the number one asset, it's always going to have a high market cap. And that's something that's sort of crucial to not fall into when you're generating your own sort of price predictions for the year. And with price predictions, I'm not talking you think, I don't know, Bitcoin's going to go to 5 million. I am talking about taking your investment out for a profit specifically, which is why we always want to remain subjective and with a level head, and not sort of just think everything's going to go up forever. Now, what you should never do. What I've done here is I've taken a couple of screenshots. I've blocked out names. I've blocked out video names and timestamps because I don't want to be done for defamation. But this sort of stuff really, really, really grinds my gears. I see it every day. And this is the main thing that people ask me: is this asset going to this price? Is this asset going to this price? And to be honest, the majority of the time, the answer is no. It's just something that they've seen tweeted on Facebook, heard from a mate, or seen on YouTube. Is the worst one. Now, XRP is the asset I'm going to use for an example in a short while when we actually move on to the charts and have a look at a real life example of market capitalization and utilizing that. But I just want you to take a look at the three videos. Now, these were all done by the same person. I don't follow this person. I have no affiliation with this person. I blocked out their name for defamation rights. However, this person has uploaded 3 videos to their YouTube channel where they have a decent amount of subscribers, giving out 3 price targets, 2 which are absolutely astronomically or impossible, in my opinion. But even one, XRP to $369, in my opinion, as a crypto investor, as a trader and an economist, to me, that figure is just sky high too. Now, I've actually not watched the top 2 videos. I've only watched the 35,000. I couldn't bear to watch another one because the way it's broken down sounds really sort of literate and it makes sense, but it's not real. Now, let me tell you, XRP is never, ever, 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 ever going to $35,000. I was thinking before recording this, I was never going to say that, because, you know, if it manages to get to that price target in future, then I'm going to look like a right idiot. But it will never go to 35,000. The reason being, for that video, if I remember right, this person was saying that if every single bank adopted XRP as a global currency to transfer payments from country to country, and it took control of even half of the monetary supply in the world, it would be looking at something like $40 trillion. Now, this person then said, you divide that by a billion XRP tokens, which again doesn't make sense, because at the minute there's actually 46 billion XRP tokens in circulating supply, which we'll come on to in a moment. So the maths doesn't add up. Okay. However, these videos gain traction. As I'm sure we've all heard of clickbait, these videos will gain traction because somebody will be Googling or YouTubing, what's XRP going to? You know, I've put in £200 this year. I want to know where to get out. They see these videos, XRP to 35,000, and then they think, oh, Bitcoin did that. You know, I bought XRP at $1. Bitcoin was at $1 once. Maybe in 10 years or 15 years, XRP might have followed Bitcoin, might get to 35, might even get to 60K. But they don't understand the difference between supply and between the market cap and just the general tokenomics of the two projects, or any project that's out there. The tweet on the right now, this is actually from somebody who I follow, who I have a lot of respect for. They have a lot of followers in the crypto industry. Hence why I blocked out the timestamp and the name, because again, I don't want to be done for defamation. But this sort of thing as well, it bugs me, because saying Bitcoin under 100K is cheap is completely false. Bitcoin's never been to 100K. At the time of recording, Bitcoin has never, ever, ever touched $100,000. So how is anything under $100,000 cheap? It does not make sense to me. So for me to have a large audience and to be tweeting this sort of stuff is really irresponsible, because you're going to see a lot of retail investors come in who know little about the markets. They're going to read that, take it as gospel, and invest money blindly. I don't care that I got it at 65K because, well, this person said it's going to $100,000. Now, do I think $100,000 is possible? Yeah, of course I do. I think it could go higher, but I would never blatantly say something so ridiculous as Bitcoin under 100K is cheap, because it just emits just a completely wrong message, and it takes away from the legitimacy of a token price, and sort of the foundations that price is built on, which is the market cap and the supply of the token. So what is market capitalization? Essentially, to break it down the easiest, it is just the amount of dollar value that's stored within an asset. It's the same as market cap of a share. You know, in the stock market, it works the exact same. How many dollars has people put into this project? Okay, over the times, you know, who are still holding the asset. It's sort of just an accumulation of money. It's like a big pot of money. People just keep putting it in, and the market capitalization goes up. Now, we'll get onto how that ties in with the circulating supply and how we reach a token price shortly. In fact, I'm going to cut that bit out. Just started rambling on there. Okay, so in other words, it just shows how much of the market share that asset holds. There's a few tools that we can use to look at this. We can use the total market cap, which currently, I'll just drag coin market cap over. You can see at the top of the screen, we've got a market cap currently of $1.4 trillion with a Bitcoin dominance of 46%. Now that shows that Bitcoin's market cap accounts for 46% of the total cryptocurrency market cap as a whole. Okay, now go back to the presentation. If we then look at total and circulating supply, we'll just get the difference out of the way so that you understand it a little bit better. But total supply basically is the absolute max amount of tokens that can ever be mined or minted or created for that asset ever going forward. So Bitcoin, as we know, has a 21 million absolute max amount of tokens that will ever be mined. And due to their halving protocol, I think it's sort of indefinitely, because if you're halving rewards, it's just going to keep going down. It's sort of like, it is an infinite cycle, I believe. I don't think you'll ever sort of reach that 21 million. But then we have other assets. We have Binance Coin that has a max supply of 170 billion. We've got Cardano, which has a max supply of 45 billion. So when that is up, there is no more tokens being created. So just to put that into perspective, with things like fiat currencies like the US dollar or the Great British Pound, we can print dollars or we can print pounds going forward, creating things such as inflation and devaluing the currency as we go. And that's sort of what these supply caps are set out to sort of overcome. We don't want Bitcoin to devalue over time, because it is a scarce asset that should rise just like gold, you know, and so on and so forth. Now, the circulating supply is the amount of tokens out of that total supply that are in current circulation at the minute. So this number is always changing. It's never the same day by day, because, you know, blocks are being mined every 10 minutes, 20 minutes, depending on which proof of work protocol you're looking at, or they're minted by you know, stake pools like on Cardano, for example, every 5 days. Now, these include dead tokens, so tokens that are saying dead wallets, you know, from somebody who might have passed away without sending their assets elsewhere, or somebody who's lost a password or seed phrase to their wallets, that they're still included in the circulating supply, even though they're sort of locked and can never be touched, which technically will only ever help with the scarcity and the asset value appreciation over time, because it's sort of, I think with Bitcoin specifically, I'm sure there's roughly between 3 to 4 million tokens, or 3 to 4 million Bitcoins that are lost forever and will sort of never be touched again. So yeah, we say the total supply is 21 million. That figure is actually significantly lower. And yeah, we might not see the effects of that now, because we're still mining blocks every 10 minutes. But later down the line, as Bitcoin becomes more scarce and halving rewards halve over time, we will see that take an effect on price, I believe. Now, the biggest thing about this is using these two things to calculate price of a token, which I'm going to I'll take you onto the charts in a moment so that we can look at XRP, and I can sort of show this in sort of real time. Well, it's not real time because I've already worked it out, like 4 different examples, so that you can sort of understand what I'm talking about. But if we have a look at the example on the presentation now, you can see that it's such a basic formula. All it is market capitalization, so that's the dollar amount, divided by the circulating supply, which is again the amount of tokens that are in circulation, not the total supply, and that will give you your token price. So if we look at Bitcoin for an example, I think it's a little bit higher now, but this is what I've recorded earlier. So Bitcoin's total market capitalization in dollar value is $655 billion. I'm just going to round it down for ease of speaking it. Divide that by the circulating supply of 18.7 million, and that gives you a $34,622 Bitcoin. Now, every 10 minutes, that circulating supply is, you know, we're essentially bringing more Bitcoin into the world every time a block is mined. So that circulating supply is constantly ticking up. Now, what we need on the other end is we need that market capital for the asset to go up in value. We need that market capitalization to be going up alongside it. Okay. So as money flows in and out of that market and of that asset, the token supply changes, price will increase and decrease. It's sort of just a working mechanism that over sort of a long period of time, you'll be able to see token supply going up, market capitalization hopefully going up with it, which will increase the asset price over time. Now, I'll bring over Trading View just so that we can take a look at XRP for an example. And the reason I'm using XRP is because it's to be honest, it's one of the most well-known projects among retail investors. It's a project that I get asked about a lot with price targets and stuff. I shared something on my Instagram probably 2 or 3 months ago, stating my XRP price prediction for the year, which I think, to be honest, I think I said I see it struggling to break $10, an absolute push, best case scenario for the bull run. But I said conservatively, I think I said $7 to $8. I might have said a little bit higher. I'm not 100% sure. But I had a flood of messages coming in after that saying, I thought this was having mass adoption. I thought this was going to go to, I've been told it's going to go to $100. I've been told Ripple will be $1,000. It's the next Bitcoin, and all this sort of nonsense from people who've been sort of misled and fed incorrect information. Now that we know where an asset's price comes from, it comes from the amount of money that's sort of invested into that project or into that asset. We can sort of filter out the nonsense just by looking at the math. If it seems too high or it seems wrong, seems too good to be true, it most likely is. I was once asked if this asset, it was a new NFT token, which was on sale for 1/10 of a cent. And one of my friends messaged me and asked me if he should buy it because somebody he knows told him that he was going to get to $10,000 per token. I had a look at the tokenomics of the project. I can't remember what the project was named now because this was ages ago. And there was something ridiculous like a trillion tokens supply. Now, I basically broke down the math to him and I said, for that to happen, we're going to need something ridiculous like $7 or $8 quadrillion, which is just not even that much money in the world. So the math just doesn't add up for the price to get to that level. And this is the reason why, we see when you rank by market cap. I'll just change this so we can see. I'll refresh it as well because I think prices have changed. Yep. So this is ranked in market cap. Okay, so Bitcoin's the biggest, then Ethereum, Tether, BNB, ADA, Doge. But the prices are sort of all over the place. 34k, 2k, $1, 293, $1.37. Now, when somebody who doesn't understand these mechanics and sort of the reason for the prices, they'll look at that and they'll think, but why is ADA 137? Can it get to Bitcoin's price? Can it get to Ethereum's price? Why is it so cheap? But in reality, it's not cheap. That's a premium price for the ADA token. The only difference between the projects is the supply. The market cap is still denominated in dollars for each project. It can rise and fall. So, Cardano can match Ethereum's $256 billion market cap, but it's not going to have the same price tag. Now that's because the last factor that will change that is the circulating supply. Okay, so you can see we've got 31 billion ADA tokens compared to 116 million ETH. Yeah, so ETH is super scarce in comparison to ADA, hence why it's so much more expensive relatively when you work it out. Okay, so we're going to look at XRP. Like I say, it was the one I'm always asked most about, but we're actually going to break down the physics of market capitalization and how it moves with the total supply over time. Now, this is something that I think a lot of crypto influencers seem to overlook or don't understand, or just potentially don't even know. I've watched a lot of videos and nobody talks about this sort of stuff, which is why I want to cover it and go over it. Now, the all-time high from 2018, January 2018 for XRP was $3.37. I know this chart says a little lower, $3.31, but that's just the price feed that I've got for this chart. The 337 I took off Coin Market Cap. I checked the market capitalization at the time for XRP, which was 130. It's the top figure there, 130 billion. Okay. So all I did was I divided 130 billion by $3.37, which gave us our circulating supply of 38 billion tokens at the time. Okay, so it was 38.7 billion XRP tokens in circulating supply, which gave us our price target. I mean, our price at the time, our all-time high, $3.37. Now, throughout the bear market, when people are buying it up, as it starts to pump, we see a lot of people on YouTube, on Twitter, calling all-time highs to be broken. You know, we're about to hit $3.37 when in reality, you know, we're at 60 cents sort of thing. And I just want to highlight the difference of what the market cap would need to be if we need to hit that same all-time high. So if we, in fact, I'll come on to that in a moment. I'm going to look at the all-time high of this bull run so far first, and just sort of give you the idea, give you an idea of the difference in circulating supply first. So the all-time high, we had a $1.83 XRP, and that was denominated by the $83.5 billion market cap. Divide that market cap by $1.83, which gave us a circulating supply of 45.4 billion XRP tokens. Okay. Now, to me, that math seems strange. Like 183 seems low for a market cap that, you know, it wasn't far off 130 billion. I would expect that to be higher. And the reason is, if we look at these two calculations up here, if we mirror, okay, we mirror the market cap. So round it up, 131 billion. So we've got $131 billion has been put into XRP or put into Ripple. So investors have, you know, pumped the same amount of money that was in XRP that was in 2018. Okay, 131 billion. The circulating supply has now changed. We've now got 10 billion more tokens almost. So back here you can see we almost had 39 billion. Now we've got 47 billion. I mean, we've got 45 and a half, but I would imagine by the time we hit these highs, you know, we might be at 46 or higher than what we are now, I would presume. So what I would do is I would divide the market cap, 131 billion, divide that by 47 billion tokens. Now that gives us a price of $2.78, which is a big difference from $3.37. And the market cap is the same. It's just that the circulating supply has increased over time. So there's actually more XRP for people to buy. There's more to be traded, which basically means that the asset is less scarce and therefore not seen as valuable through basic supply and demand principles. Now, if we want to match the all-time high or the previous all-time high of $3.37, all we do in that case is we times 337 by the circulating supply, 47 billion, which then gives us our market cap that we would need pumped into the market to achieve that all-time high again, which is actually 158 billion, 756 million and $600,000. Okay, so you can see that's almost $30 billion more we need just to break all-time high. Now, this is relevant for any token that hasn't already achieved its max supply. If you've already achieved your max supply, or you've minted all your tokens, you've mined all your tokens, going forward, your circulating supply should not change. So, you know, if you have, let's say the circulating supply was the same, as price comes back to this point, the market cap will be the same as well, because it needs the same amount of money in the project to get the price to where it is. But until all your tokens are out, the market is getting progressively more difficult to achieve these all-time highs again and again and again. Now, this is something, like I say, it's overlooked, because to me, adding another $30 billion in, yeah, it's achievable, and I think it will happen, like, don't get me wrong, but we overlook the fact of how much more money needs to come in due to the 10 billion more tokens, or 7, 8, however many billion more tokens that are in circulating supply. Now, let me just do a quick calculation, if I can bring the calculator up. We'll use the $369 from that video that I had on the presentation, times 45, 404, 910, 844, which is the current supply of XRP, the current circulating supply. That means we need a market cap of $16 trillion. $16 trillion. That's more than the market cap of gold. Okay, with the current supply, that's more than the market cap of gold. Now, if anybody can justify that to me, even within the next 5 or 10 years, or maybe even the next 50 years. I cannot see XRP taking a bigger market share than gold, or market capitalization, sorry, not market share. The math just does not add up to me. And now I think my calculator will probably break if I try and do his ultimate calculation of 45, 44, 9, 10, 844. I don't even know what that number is. And to be honest, I'm not going to bother trying to work it out. It's probably a septillion or a quadrillion or something. And I hate to break it to him or anybody who followed that video, but that's not going to happen. That money's not in the world to invest into a cryptocurrency project. And this is why I was trying to hammer home earlier the point of staying realistic with your targets and understanding that the market and the price of an asset that you're invested in is actually derived from mathematical equations, and not just because more people want to buy Bitcoin or more people want to buy Doge. Everyone's talking about Dogecoin, so the price is going to go and hit $3. It doesn't work like that. It's actually based on physical dollars going into the market. And let me tell you, if you don't have somebody pumping billions into a market, it's not going to move. No matter how much people tweet about it, no matter how many people post on Reddit, it won't move if there's no money going into the market. And that's sort of the end of that. Dogecoin is another interesting one, because, you know, we've seen similar things in the stock market this year with GME, you know, GameStop. I forget what the other one's called, AMC, and then Dogecoin as well, and then a load of other, you know, crappy coins on the DeFi protocols. We've seen lots of retail investors sort of bunching together and pumping a load of money into projects, taking gains. Like, this is just a crazy X. So 10,000% gain on Dogecoin since January this year up until the peak in May. Now, at the time, Dogecoin's market capitalization absolutely skyrocketed, and it made it look like it would keep going forever because everyone was buying it. But in relative terms, like, the market cap is sort of capped with the longevity of a project. Okay, so for example, I'm not going to go into it too much because it's deviating from the lesson topic. So yeah, when we're looking at the market cap of these tokens as well, something else to consider is, for example, with Dogecoin, it's a ridiculously high percentage of tokens that are held by a very small amount of holders, which really sort of limits where the longevity of the project goes, in terms of how far the market cap will go up. If you, let's say you're a long-term holder from Doge, I think I was reading something on Cardano earlier, it might be, I can't remember it, but if you get into a project like Dogecoin early enough, as an example, before it's sub 1 penny, and then all of a sudden, you know, you're this multi-millionaire with these billions of dollar worth of asset, and then you sell at 70 cents or 60 cents, that is going to drain the market cap because these people now hold a huge amount of that market capitalization, which is something to consider. You know, when you are looking at projects, look at how big the holders are. Unless you're looking at a privacy coin like Monero, I think Monero and a couple of others will actually block you from viewing your wallets and how many tokens you have. But with things like Bitcoin, Cardano, any DeFi projects, you can always view how many tokens a person holds in their wallet, so you can sort of view the whales. You know what they're doing. Obviously, every transaction is logged on the blockchain, so we know that there's, with Bitcoin, it could, even if Satoshi sold, it probably dumped the market, but the market and the market capitalization becomes sort of self-sustainable is probably the right word, and which is why we see on all the low cap tokens. Let me find a low cap. Best example I can think of for what I'm trying to say is Shiba Inu. Now, a bit of backstory about this token, because it fits really well with what we're saying, is this is a little DeFi project. Okay, so they was jumping on the back of Dogecoin's hype, created a project, put it on. I think they launched on Uniswap and then went on exchanges. What they did was they sent like millions, no, it's more than millions because the supply is absolutely massive. They sent a hell of a lot of tokens to Vitalik Buterin, who is the founder of Ethereum. They sent him a load of tokens and they said, like, you know, as a sort of, they wanted him to promote them, you know, or, oh, this company's just sent me millions of dollars, maybe even billions at one time, to try and get them started. You know what he did, because the reason he did this was because SHIB crashed Ethereum for a few days, sent gas fees skyrocketing, so Ethereum transactions were really expensive. That's what the gas fees mean, because everybody was trying to buy Shiba Inu because of the hype around it. So price was rocketing. Oh, Vitalik owns X amount of SHIB tokens, like he must be on board with the project. And then all of a sudden he sells all his tokens, and just look what happens. He dumped the market because he had that much share of the market cap of Shiba Inu. And then since then, he's been struggling to recover. But that's a perfect example of somebody being able to not manipulate, because he didn't manipulate it, but he was able to crash the market cap of Shiba Inu because they gave him so much control of X amount of tokens. I don't know what the amount of tokens they gave him off the top of my head was. But yeah. So yeah, what I'm going to do is, some questions have come through whilst I've been talking, so I'm just going to have a look at them and I'm going to answer them quickly now before we end this lecture, because I've covered everything that I want to talk about in terms of market cap, total supply, circulating supply, and how that we can actually get that price target. So how often does a market cap get updated? The market cap is sort of updated, well, every second. Obviously I don't know, it depends on what feed you're looking at. It depends how fast they update their servers, sort of thing, but the market cap is like an ever evolving thing. It's like, imagine putting a hat in front of you and putting pounds in, taking pounds out. It's as quick as that. As fast as the feed is, that's how fast the market cap will be updated. But if you, let's say you check today and then you check in 20 minutes time, or tomorrow, or in a week, it will always be different. Okay. Okay, some of the other questions aren't related to market cap. So what I'm going to do is we'll end the lesson here, because I've covered everything I want to cover, and then I'll answer these questions after, for the people who are on this live recording at the moment. So thank you for your time, and I hope this lesson has given you some value in terms of looking at projects. And please try and, like I say, stay realistic with your targets. And if you are heavily invested, take some profits on the way, but get a target and try and stick to it, and don't pick the absolute top. If you think, if everybody's saying $15 for a target for a project, bring it down to 13 and a half, scale out, because if everybody's looking at 15, the big guys are going to be looking at 14, so that the guys who are holding higher are just providing liquidity for them. So yeah, stay safe in the crypto markets, because it's super volatile, and we'll see you in the next one.